All right, guys, it looks like we are live. Welcome back to Roxham TV and also welcome back to Jam Crypto. Well, I hope you guys are doing all right because there's a really massive liquidation being took place literally just in the past 24 hours. Right now, Bitcoin is recovering and surprisingly well because we are bouncing back right at the support level that we drew days ago. So it's amazing to see how TA works sometime. And yeah, I mean, I was really surprised. Hope you guys weren't affected because there were like more than $1 billion being liquidated. And so far is the biggest liquidation day in 2025. So yeah, during this time, like there's so much volatility. If you guys are a professional trader, like a lot of my friends are, they're extremely degen. If you know what you do, then there's like, of course, massive money, massive opportunity being made. But most often than not, like 90% of the people in the market is actually losing money, and it's fully reflected in the liquidation price. We're gonna dive deeper and we're going to look into the some of the data. We're going to look at the chart as well, and without further ado, let's hop onto our Bitcoin price action. So my screen is extremely small right now. I'm sorry about that. And yeah, okay, sorry, we have a tiny glitch, but it's okay. Let's pull out the Bitcoin chart. So I'm zooming closer. And again, if you didn't know what I was saying, like I drew this rising channel days ago, and it's so amazing to see how it's playing out exactly as we predicted. So what's going on here is that, okay, how you read this rising channel and how you manage to find that support and resistance line. So we are seeing this forming since 31st of August. How you read this is usually you take the width of the rising channel and you go to the breakout point. So the breakout point is 115, somewhere around that, and you will get a low of around 111K. So it's so amazing to see how TA works, and it's exactly like the, well, maybe a little bit above, but like it's exactly 111 that we talk about. So let's go to the 111 level right there. So we're bouncing off the support line of 111 rather well. Of course, the question right now is that, okay, is the correction already being done? Is that we are out of the wood already? Well, there are different scenarios. So what we need to do right now is to zoom closer and we look at the, okay, we know 111 is a key level to watch because it's also the rising channel, and it's also a level, is like a prior high and also prior low level as a major support. So now it depends if the retest shows enough strength. So if we zoom closer on the hourly, we saw that, okay, Bitcoin bounce at the support level of 111. So there are 4 bars, so 4 hourly candles close above that. So it's a nice little bound. Is a little less than 2%. So how much exactly? So yeah, 1.5% within 4 hours. That's not bad. That's like a little strength. However, like if things go south, okay, Bitcoin maybe in the next few hours to come, we touch this level of support, and again, that's not a good sign. That's not a bullish sign at all. But what I'm seeing here is that, okay, I'm happy with this bound, like a 1.5% within 4 hours for Bitcoin. That's really good. So we were on the hourly and we were talking about the rising channel. So if you guys caught our live streams in the past few days, I talked explicitly about this rising channel. So congratulations, because it's working really well for our TA if you guys were trading this. But unfortunately, a lot of people got wrecked. We're going to look at the how much money got wrecked, the liquidation data in a bit. But right now, let's go to the daily chart. So daily chart, again, because we broke out of the rising channel and we test a level of support of 111. Looks like we have formed a low, like from a short-term perspective. Maybe 111 is the local bottom already, but again, like things are not certain. It depends on the retest level, and it depends on the hourly candles, whether is showing any strength. So we are here at 111, and most of that, I would say, if we, okay, first of all, we didn't manage to close about 117, and 117 is a major resistance I'm watching as well. The reason why 117 is so critical is because, okay, if we zoom out and zoom all the way back to July 2025, you will see that this is like a mid-level, like a mid-range for consolidation. So if we don't get above 117, okay, we try to test above 117. Obviously, we got rejected. Like we saw there's like a wick about 117 back in 18th of September, but we didn't manage to close above that. We tested as the resistance, and boom, we got rejected. Right now, we are to the support, exactly the support level that we drew days ago at 111. So if we don't manage to break above 117, like all these, it could be noise, right? People were saying, okay, since that the rate cuts, everything is coming, like Jamie, you should be more bullish. And I was like, no, we were not out of the wood because of this rising channel. And if you zoom out, okay, we have a nice rising channel, nice rally. However, it's also a lower high, right? So that's why I mentioned that we weren't out of the wood. But again, looks like on the short term, 111 is the bottom, local bottom. I could be wrong, okay? There are different scenarios, right? Like scenario number one, basically, if we lose 111K as the level of support, it's not like the end of the day. Let's now hop onto the weekly chart, so we can look at things at a longer time frame, longer time frame perspective. All right, so let's remove that rising channel. And the reason why I think even if we lose 111K, right here, so 111K as the level of support, is not the end of the day. So let's pull out the 50-week moving average and also the bull market support band. So on the weekly, we touch the bull market support band a little bit. So another reason 111K is so important is because it's written on the bull market support band. It's so amazing to see how TA works sometimes, and also it's reflected on the rising channel. It's the width of the rising channel. So if we lose 111K, let's not forget there's still the 50-week moving average. Right now it's sitting at 99K. And between the 50-week moving average to the current price, there's still so much room, like a 14%. Or if you look the other way around, like we have to drop to we drop 12% in order to reach to the current 50-week moving average. So why I'm saying that is that, okay, it's definitely not the top. It's not the cycle top. I think the best time is yet to come. Again, Q4 is arguably the best time for crypto. It's the best time for Bitcoin. In 2024, we did 47% in Q4. So as in 2023, like most often than not, a new all-time high, like a cycle top, is being printed in Q4. That's why I'm extremely bullish in October. So if we, I keep seeing comments on X, on Twitter, people were saying that, okay, it's so concerned, especially there are some rumors about no longer rate cuts are on the table. There's some thought going on about rate cuts. And also there's like a massive liquidation, the biggest liquidation in 2025. So people were a little bit bearish, but like, again, Bitcoin bounced back to 113, which was so surprising. Like Bitcoin is showing so much strength, yet people are calling a cycle top, or there's nothing wrong for being cautious. But again, I like to look at data. I like to look at the chart. Like for us to call it a cycle top, first of all, we are only at the edge of the bull market support band. And second reason is that, okay, we have to zoom out and actually focus at the at the 50-week moving average. So let's zoom all the way out. So last time we touched the 50-week moving average, it was back in April. So 7th of April, like the first week of April, we touched 50-week moving average. Like wicking down is all right, as long as we don't close below, like having a weekly candle close below the 50-week moving average. So right here, we have the bull market support band, we have the 50-week, and there's like still so much room between the 50-week and our current price. So I don't know why people are like panic when they saw the liquidation. Like there's like a lot of fun on Twitter. Like sometimes I like Twitter because I get most of my information from Twitter, but like some of the sentiments or the tweets that people are posting is, I will say, is a little bit ridiculous sometimes. Like if there's so much sentiment or there's so much fun already, like it's good for your mental health not to go on Twitter. Sometimes, I'm saying sometimes. All right, so we touched 50-week back in April this year. We touch again in September 2024, yet again in August 2024. So we haven't actually touched the 50-week moving average, which is extremely good. Like as long as, okay, we close about the bull market support band, it's showing so much strength. And if we go all the way back to 2020, oh, maybe I need to pull out another chart to show that. Okay, maybe let's see, Bitstamp. Okay, there you go. So 2020. That's a lot of drawings. Hope you guys aren't too. I mean, it's a little bit confusing, but bear with me. So focus on the blue line. That's the 50-week moving average. So back in 2020, we actually we held the bull market support band. So let me zoom closer. Can you guys see? Let me know in the live chat. So we only touched the bull market support band, and then we went on a major rally. So that's let me see. That's from here, oopsie. From here all the way to the top. So that's like a 544% upside for Bitcoin, just because we used the bull market support band as the support. So if we are repeating what happened back in 2020, if we are using the bull market support band, that means the upside is a lot bigger. If not, if we use the 50-week moving average, it just means that we're gonna, like, it takes some time for us to recover from where we're gonna be. But looks like Bitcoin is still in control. Things are looking extremely good. So there are different scenarios. Again, on the hourly, I'm watching whether we can use the 111K as the level of support. That's a very important stuff. Like if we don't break above 117, okay, let's go back to the 1-day chart. So the daily candles. If we don't break above 117, so which is the like mid-range here. So the reason why this is so important is mid-range consolidation, and it's also the prior high back in late August. So this is a very important level. So if we don't break above 117, then maybe we're just going to chop around till the end of September all the way to the beginning of August. I mean the beginning of October. But we'll see. Like in terms of the chart, I wasn't like too concerned. about it. But like this morning, I was so surprised to see all the liquidation. Like I wouldn't say, okay, it's very it's very surprising to see liquidation because it happens every single day. But the volume and also the amount of money being liquidated is very surprising because it's the largest liquidation event in 2025. There were more than $1.5 billion being liquidated. Like this one is not showing right now, but when I checked this morning, it was like more than 1 billion. This one is flashing is in real time. That's why if you look at the 24-hour rag, there's only $367 million. But this morning, there was a lot. So mainly from long, like 1.3 billion from long, and then the rest were from short positions being liquidated. Most of the coins were affected was, of course, like Ethereum, multi-million dollars being liquidated in Ethereum. So it's Bitcoin, like second one is Bitcoin. And then there's like Solana, like 80 to 90 million dollars being liquidated for Solana. And in terms of the exchanges, of course, like Binance took most of the liquidation because Binance is the biggest trading platform, is the biggest exchange, and traders really like to use Binance to do contract or like spot trading in general. So if we just use this as our reference right now, second one is OKX, and then we have Bybit. It's very interesting to see, like, okay, if we even go down on the list, fourth one is Gate, and then we have XTX. It's very interesting how all of these exchanges are Chinese exchanges. Maybe it shows something. Like maybe it's because that a lot of like traders, or mostly Asian traders, are Asian for some reason. Because right now is Korean Blockchain Week, and I love Korea. I went to Korea a few times, and every single time I had so much fun there. But like what I notice about Korean trader is that they are extremely Asian, and so as Chinese traders. Like if they have $100, they're gonna bet $112 on some of their trades. And a lot of like those altcoins groups are extremely active on WeChat. So like WeChat, if you didn't know, if you guys are from the West, it's basically like the WhatsApp of China, but it's a very all-in-one app. So Elon Musk keeps saying that he's trying to transform X into an all-in-one app. So it incorporated payments, it incorporated socials, stuff like that. So WeChat is like you can chat just like you are texting someone on WhatsApp, but you can also send money. Like they have the built-in wallet, and you can also do socials. Yeah, it's extremely popular in China. That's for WeChat. But what we're seeing is that a lot of like these trading groups reside in WeChat. So that's very interesting. And that explains a lot about the Asian mentality from all these like Chinese traders. Chinese and Korean are the most Asian people I have ever seen, I've ever witnessed. Myself, I would say I'm more like a long-term perspective. I like to invest into projects that I see potential. I like to invest into assets like Bitcoin because Bitcoin could provide me ease of mind. I don't have to like constantly check. Like for me, I like even though without checking Bitcoin's price for like a month, I'll be okay because I know that Bitcoin gonna go to higher places. I know Bitcoin is digital gold, so that's how much faith I have in Bitcoin, and I can happily just let it ride and let it store in my cold wallet. So that's for the liquidation. Again, massive liquidation being took place, and most of these are really big Asian exchanges or Chinese exchanges in particular. So yeah, that's for the liquidation. As for the funding rate, I do want to cover the funding rate a little bit more because they are intertwined, like they connected to each other, like liquidation and also the funding rate. So if you guys didn't know or how to read funding rate, I could provide a very beginner-friendly explanation. So it depends. So we're going to look at BTC, and different exchanges have different funding rates. So if we have a positive number, so for example, for Binance right now is 0.0079%. That means a majority of people, of traders on Binance are putting a long positions. So if you want to pull another long position on Binance, then you will have to pay 0.0079% to the short positions. Like in other words, if you just pull short position on Binance, you'll be earning the funding rate, you'll be earning the funding fees just for opening the contract. And this is actually a strategy that some of my traders friends would use, because each exchanges would have the own funding rate, and for the own pairing, like maybe for BTC or ETH, like all of the pairings are different. And if you go to like this is, I'm just sharing the high IQ play from some of my trader friends, how they can earn money just using funding rate. So like if you go to, okay, for example, highest funding rate, we have like a positive number 1.57% for this pair, so UX Link versus USDT. So in other words, they are more long than shorts because it's a positive number. If I just enter if I just open a short contract trading this coin, then I could already, I will be earning 1.57% from the long traders already, like without doing much. And usually, like this is a very high level play and extremely risky, because funding rate, it comes from different rounds, and usually there are like 8 rounds on most exchanges. And on the 8th hour, then the funding rate going to reset. So what some of my trader friends would do is that before the funding rate, before the funding round ends, like before the 8-hour mark end, they'll just like close the contract to earn that percentage. And if you look at even on OKX, like there might be more profits being made on OKX. There's like a huge divergence. So on OKX, there are like a majority of traders are shorting UX Link versus USDT. So what some of the really advanced traders, they can do is to open a long position. So because it's a negative number, so in other words, the short positions have to pay 4.55% to the long positions. And before the 8-hour comes to an end, you can close the position to earn this percentage without doing much. So that's really high IQ play. And I personally, I wouldn't do such thing because it's a full-time job and is a professional job that people would do between 9 to 6. But yeah, it's just like when I heard about this strategy from some of my friends, because a lot of them are trading the market, I was like very eye-opening. I didn't know, okay, you can do such thing. But okay, that's just the trader's game. Let's come back to the funding rate and how we can read this and take advantage of the market, or at least give us a brief reference where the market is heading to, where BTC is heading to. All right, so as I mentioned, just focus on BTC, of course, like a Binance, because Binance, there's like half of the crypto trading comes from Binance, so it makes sense to only look at Binance. All right, so look at this number in particular. Usually, maybe if it's smaller than 0.01, it means neutral. So right now it's smaller than 0.01%. It's neutral, it's healthy. However, if it gets to 0.1%, that's extremely so much sentiment. bear in mind, like if you see a 0.1% in like some of these exchanges, I don't think Binance will get to 0.1%. But like if you see many of these exchanges are taking that 0.1% level, then yeah, you will know that there's like a trend reversal coming. Right now, we're seeing a neutral, healthy market. Hence, I'm not like concerned about the correction in Bitcoin. It's just doing what it does. And again, it's September. Usually, I'm speculating the last week of September till the first week of October, we might have like a tiny correction, like a consolidation period. That's why I'm not concerned. But if you guys are interested in this like funding rate or this like trading stuff, you can look into that. Like the best way to do the analysis is on Coinglass. You have all the data you need. But again, like the reason why I'm showing this is, okay, this is intertwined with the liquidation rate that we saw today. And also, if you just look at the funding rate, is looking like we are like at a healthy market. Everything is not too surprising. If you want to dive deeper, we can do like a deeper tutorial, deeper analysis on the whole OI and also the volume. Like long story short, like OI is the open interest, so the value of outstanding contracts, where the trading volume is like how much turnover in buys and sells, and this more reflects on the short-term activity and retail flows. But yeah, if you guys are interested, definitely explore, look at this data, and yeah, we could maybe exchange some information what you found using this data as well. But like, let's dive into the news of today, because I woke up this morning and some of my community tagged me in some of the posts like this, like the Fed is no longer cutting rates in 2025. So like I woke up this morning and I was like, oh my God, there must be so much FUD in the market. And I immediately checked the price of Bitcoin, but Bitcoin didn't correct that much. So it's showing strength, all I'm saying. All right. So there's a little bit of FUD, there's a little bit of confusion. And also it's from Coin Bureau. So I thought it was like, okay, it's from a legit source. But like he was using Jerome Powell as the face. It was a little bit misleading because like no more rate cuts coming. This wasn't said by Jerome Powell. It was like Raphael Bostic. So this guy. Who is this guy? Like I did some research and I looked into his background a little bit. So this guy isn't just a random name in the financial headlines. He is one of the 12 regional Federal Reserve Bank presidents in the US. So he does have a voice when it comes to voting, we're going to get a rate cut or not, things like that. So okay, he studied in Harvard and he has a PhD in economics in Stanford as well. So the current role for him, like since 2017, actually, he has been a president of the Atlanta Fed, covering the US Southeast. Like he doesn't just oversee banks, he also participates in the Fed policy meetings that decide US interest rates. So in other words, he is not the top boss. The top boss is still Jerome Powell. He is just a voting member in 2025. Like, I'm not trying to say that like what he's saying doesn't carry weight. He does because he's one of the voting member. But I kind of got the gist that the market is like the sentiment on X was taking this a little bit too seriously. Okay, if you guys don't understand how the Federal Reserves, and especially for those of you who are not American, so there are different mandates for the Fed. Like, okay, well, we're calling for a Fed mandate. We're gonna get into that. So the Fed always have a dual mandate. The first is low unemployment rate. The second is like a stable inflation around 2%. And then right now people are saying, okay, the Fed should have a third mandate, which is the yield curve control. So anyway, how the Fed works. So there's like the board of governors in DC. This is like 7 members appointed by the president. So Jerome Powell is the chair. There's also the 12 regional banks. Each covers a district. So this guy, this Raphael Bostic, he leads the Atlanta Fed, so District 6, which covers places like Florida, Georgia, Alabama, and parts of surrounding states. And then there's the FOMC committee, like the rate setting team. Those would include 7 governors, New York Fed president, and 4 rotating regional presidents, so just like Raphael Bostic in 2025. So this structure matters because it balances perspectives. Like New York may worry about Wall Street, while Atlanta sees Florida tourism and Georgia factories. So together, it makes policies more national, not just for the rich or the DC elites. So basically what this guy said, like this Ralph Bostic, what he said when I checked the news this morning, is that he told the Wall Street Journal he expects only 1 rate cut in all of 2025, even after the Fed just cut rates by 0.25%. Like, he's saying that there is a concern when it comes to inflation, like the inflation CPI is ticking up, so as the core inflation is sitting at 3.1%. Unemployment rate is also ticking up. Like if we reach 4.5%, like the current rate is 4.3%, like it's gonna get very concerning. So basically he's saying that the market should be more cautious instead of just cutting rates. He doesn't support a rate cut, in other words. So why this matters? Because most of us, we are speculating that we're gonna get a rate cut. We have another FOMC meeting happening on 29th of October. So 89% of people think that we'll get a 25 basis point cut. And then another 75% of people think that in December, we'll get another 25 basis point cut. So what he's saying is completely against our prediction. That's why people don't like it. His stance is completely hawkish. He focused on fighting inflation. And yeah, that is like, basically he's just being cautious. And I think that if that's really his stance, if he truly believes what he thinks is the case, like about inflation and also unemployment, then there's a right for him to voice out and tell the public. Like everyone has a right, right? So there's no reason to be like too upset or too much sentiment on Twitter, like there is on Twitter, because Twitter, it can be a very mean place, like a very aggressive place. So he's just saying what he thinks and share his thought, and that is absolutely okay in my books. Even though I might not agree with him, I think not only we need a rate cut, but we need a rate cut fast, and also we need to do a 50 basis point. But yeah, again, we all have our own opinions, and it's okay to share. So why is he speaking right now? Is he trying to like create some thought in the market? Well, I don't think this is manipulation. Like it's just like the Fed doing what it does. Again, there are different voting members. Each one of them, they have different thoughts. So yeah, but we definitely saw an effect after what he said, like before what he told the Wall Street Journal. So the market's actually priced a 96% chance that we're gonna get a 25 basis point cut in October. But after, because of what he said, like the market kind of slipped a little bit down to 98%. So that's still like majority of people still expect that we're going to get a 25 basis point cut. So I think I'm like, okay, I'm not like too affected by this. This is just like one voice. Jerome Powell and others may lean more dovish, so lean more towards rate cuts. It depends on the data, like the PCE inflation this week. So bottom line is, this guy maybe he cool some hype, like the market was a little bit too high, but he definitely did not kill the market. He did not, he would just like cool down a little bit and that's it. As for myself, I still think that we're going to get a rate cut in October, but we'll see. We're going to keep a very close eye on the probabilities of the rate cut and what people speculate, what people expect. All right, so that's for the rate cuts. Let's move on to the next part of the news. So what we have got here is that gold consistently breaking new all-time high. Yet again, we have been talking about that for weeks. And for weeks, gold is breaking new all-time high. But in comparison, if you look at Bitcoin, like Bitcoin is, okay, let's go to year to date. Year to date, Bitcoin only pumped 20%, while gold year to date is 42%, is a double. So people are saying, like, especially like Bitcoin Maxi is really not happy with the chart, like with what we are seeing right now. But okay, we are here to provide a balanced view on everything and what you need to know. So gold is outperforming a lot of assets, and we are sitting like keep breaking new all-time high. We are close to 3,800 an ounce, so it's doing really good. Like, okay, what are the key factors, right? What contribute this rally of gold price? First of all, like we mentioned the rate cuts, like we know there's only room for the Fed to cut rates. We know that the Fed is not going to raise any more, hike any more rates, right? So lower rates mean a weaker USD, and a weaker USD means like gold is cheaper abroad, so the global demand would actually go up. And since like gold doesn't pay interest, so when bonds pay less due to rate cuts, gold will look relatively more attractive, and even more attractive if you have a traditional mindset, if you come from a traditional background. So that's one reason. Second reason is, of course, the geopolitical tension that is rising, especially in the Middle East. And there's like Ukraine and Russia, and also the trade war between China and US. Like Trump placed a 60% tariffs on Chinese imports. And also the new AI chip export controls rattle markets in especially this month. So again, that's like indirectly boosting gold price. The third reason is, of course, inflation. Like US debt is out of control. It crossed the $35 trillion. And then central banks around the world is stacking up gold like never before. Like if we also hop onto the chart and look at the gold reserves by country. So there are some countries that I'm going to zoom closer on because they are stacking up gold at a really rapid pace. So for example, China, they added 200 tons this year alone. They actually have they have like 2,300 tons, and the goal for China is to reduce dependency on USD. So as Poland, so Poland added 67 tons of gold. They're aiming for a 20% of reserves in gold. They're like India. India is stacking up gold like never before. So as Turkey or Kazakhstan, we talked about Kazakhstan in our previous live streams. So if you want a deeper dive on the country alone, make sure you catch my previous live streams on both Roxham TV and Gem Crypto. So that's the fourth reason why gold keeps breaking new all-time high. And I don't think it's going to stop, by the way. Like, okay, Bitcoin Maxi is not going to like what I just said, but I like to look at everything with a very balanced approach. So, and they're like oil states like Saudi Arabia. Saudi Arabia have been quietly buying off-market gold because, okay, the whole BRICS, they want to de-dollarize. They want to move away from the USD. So sovereign wealth funds from UAE and Saudi Arabia, they buy unreported tons, like unreported gold, like by tons every single year. People are speculating there will be at least like between 100 to 200 tons of gold. So there's there's a huge demand that is not fully reflecting on the table here. That's another reason why gold keeps breaking new all-time high. And there's like so much demand from Asia. Like for China per se, the Chinese economy is not doing so well. We are experiencing a deflationary environment instead of the like most of the places in Europe that is experiencing inflation. So one thing about China economy is that Chinese citizens, they have money, but because of the real estate bubble being busted in China locally, like Chinese people no longer want to invest into real estate. And what they have done is that they much rather just hold cash, because Chinese people, they have a nature of saving. And like historically speaking, Chinese people would like to put it in bricks. We call it bricks because it's actually real estate, and real estate was made by bricks. So we like to say we invest in bricks. So people like to say, like, we have always liked to invest in real estate, but it was proven to be a weak spot for the whole country. So Chinese people have a lot of money but don't know where to park. And the second best investment options for like the Chinese people is like gold. So that's why there's so much demand coming from Asian countries. And also, okay, when it comes to geopolitical tension, we are seeing there's like correlation, like a direct time. Whenever there's like a conflict being rising, like we saw in 20th of September, like the Iranian missile transfer, so gold spike another 1%. So as on 18th of September, so just last week, like the US chip caps on China, so gold is up like 0.8% because of trade fears, and then so is Russian. So just like last week on 15th of September, the Russian energy facilities got hit by Ukraine. And we saw like a tiny uptick in terms of the oil price, but we definitely saw a very immediate reactions when it comes to the gold price. So I will say another major factor that we're seeing gold rally is because of geopolitical tension. Long-term wise, I think, okay, let's go back to gold. Gold for $4,000, I think, is on the table. I don't know when we will reach $4,000, but the world is getting more ridiculous. We have wars in different places, and also rate cuts are coming. So USD is depreciating, is losing a lot of value. A portion of that money would go to gold. So $4,000 is definitely on the table. Maybe we'll get that in 2026. I don't know. But as for Bitcoin, like, okay, traditional investors like to make fun of us. Okay, look at the year to date, Bitcoin is only generating 20%, while gold is doing 42%. But guys, like, just zoom out. Okay, look at 5 years. Okay, 5 years, gold did 100%. That's not bad, but what about Bitcoin? we did like 951%. So like just zoom out and look at things at a bigger picture. I would say like the best time is still ahead of us. We still haven't experienced the best time yet because Q4 is usually the strongest month, strongest quarter for Bitcoin's return. So yeah, and if we go to the max, we know the return. So 24,000% versus gold, 119%. We all know the gist. So the best time is yet to come. I like both assets. I like both gold and also Bitcoin. I think it's absolutely okay to diversify your portfolio. It's okay to have both assets. And I don't think there's just like one against each other, just like some Bitcoin maxi would say. Like I would say just chill, it's fine. Like they're not competitors. They are complementing each other in a really good way. All right, so I'm not sure if we got time for this, but okay, let's wrap up for some Korean blockchain week, because we saw some very DOGE play, because it's very interesting, because I mentioned a little bit about the DOGE mentality of those Korean, and then I saw this video. I saw this video yesterday, and then they were like Korean doing live stream for like perp trading, like a competition. I'm not sure if you guys can hear the audio, but it's just like doing live trading, perp trading in front of a bunch of people in some competition event. So that's the guy trading live, and there's another one. They have like each one of them got a desk and then doing a live trading. So that's how deep in Korean people are. Like I'm not lying, because I personally experienced that. Let me know how many of you guys attend the Korean Blockchain Week. I went there last year. I loved the vibe. It was really DJing, but this year the feedback that I heard is that okay, the DJ mentality is definitely still here. Like just check out this video, then you will know what I mean, right? But like at the same time, there are like a lot more TradFi people, like people actually do research, and then there's some AI, some stablecoin narratives. So yeah, I would say it's slowly maturing, but the DJ mentality is still here. Like I check out some of the comments, it gave me a laugh. So look at this, like this is the most bullish thing I've ever seen. It means there's a whole new generation of DJs to provide exit liquidity. I mean, yeah, that's really funny. And check out another one, like bros learning how to turn 10K into $400. And then this person say, no wonder Squid Games was made there. Yeah, I mean, I love Korean people. Like they have the kimchi premium, the kimchi power. They love trading altcoins so much. They love trading meme coins. So it's a very interesting nation. And yeah, I would say the DJ mentality between Korean people and Chinese people might really be on par. Or maybe Korean people will slightly have an edge when it comes to the DJ mentality. I don't know, but it's interesting. Let me know chat. Let me know in live chat if any of you guys go to Korea. If you are in Korea, or if you went to the Korean Blockchain Week last year. Let me check out the live chat. So good day from Cebu, Philippines. So hey, hello, Wanderlust Asia. Thanks for watching. Hi, Jam. You making money? Yeah, I would say I'm not so degen like some of these people, some of these plays that they're doing. Of course, they'll be pulling so much leverage, but again, we cover the liquidation stuff. There were $1.5 billion. That's billion with a B being liquidated. So yeah, I'm not against leverage trading, but it's a really risky play. That's all I will put it. So that's pretty much all I want to cover. Yeah, so there's Arthur Hayes speaking at the Korean Blockchain Week. Yeah, if you guys are interested to check out, make sure to go to Cointelegraph. Yeah, that's pretty much all I want to say. Like before you go, just a tiny last bit call to action. Make sure to follow me on _IO. Make sure you put _IO, otherwise you'll get a hacker account. So because my previous account, Crypto, I got hacked, and then the hacker blocked me and changed my recovery email. So right now I'm using this handle. Make sure to follow me on my new account, and also make sure to follow Roxham TV, because we have like a really we have latest news updating every single day. I'm going live here, so make sure to hit the like. And also my show is every single day, so Monday to Friday, 4 a.m. Eastern time. That will be 9 a.m. London time for you guys. My time zone is a little bit weird because I'm in Asia, so you guys are more than welcome to watch the replay on both Jam Crypto, my YouTube channel, and also on Roxham TV. That's pretty much all I want to cover. So thanks for watching, and I will see you guys tomorrow.
Hi, Jam.